Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar dipped southwards after the Reserve Bank of Australia increased its official interest rates for the third consecutive month. At its meeting, the central bank lifted the cash rate as widely expected by 50 basis points from 1.85 to 1.35%. This is the bank's first raised rates by 50 basis points at a Conservative meeting. After the statement conclusion, the board is committed in doing what is necessary to ensure that inflation in Australia returns to target over time. From that, the market has found the Australian dollar briefly dip, but however, finding support around 68.2040 area. From the rebound, the market is likely to show further strength as we get closer towards the bottom side of this range, seen around 67.75. And if so, I do anticipate eventually a break through the midway point on the RSI and then for a further push up towards 69.35 to 70 cents. Euro, what the market is now wearing out that support level of 104.10, but still the bulls are likely to be on their guard. I feel overall that we could potentially see a rebound from this area, like previously, as you can see, going back to the beginning of May, and therefore we could see a rise up as the US dollar, which measures the greenback strength against the basket of six major currencies, is flat at 104.80. Still to come, the US Fed and also the US ECB minutes. Along with that, we've got the ISM Services PMI this week, and also the main event being the US jobs release, with an expected 275,000 jobs added in June. If we can get a bounce, let's see if the euro can claw back some of its losses and look towards 104.75.85. The dollar yen, well, the market's still not taking its eyes off that 24-year high, seen at 136.70.90. After many attempts, we've seen this fail, and I do anticipate this again if we see the market return back towards that 136.70.90 and possibly see a drop eventually again back towards that bottom side of the range of 135.70 to 134.70.80. The pound is a little bit weaker into the European session, but I feel that overall the bullishness is still holding in the background and therefore see a rebound anywhere from support area of 120.45 to 119.20.45, anywhere around this region, as the market likely to stage a further challenge to that top side of the range, seen around 123.40.60. Sterling CAD, however, still continues to pressure the downside, and at this stage still looks at that support level of 155.20. If we do see a break here, that would give further indication for a slide, but I'm not going to get negative as we are very much oversold, and I do feel there is a potential bounce coming in the course of the next 24 hours. After the recent bullish hammer, the market is somewhat lackluster for gold. Nevertheless, we could still see a rebound since the bullish hammer and therefore look towards the region of 1,819. And if we see a bid at 1,826, then that would support the move up to 1,838.42. We would need to see this in the next 24 hours, or at least the next 12 hours. The RSI is a little bit more convincing to the bull case, and any pullback towards 1,804 would find support. However, a close under 1,801 may negate the hammer. Wrapping up with all, the market still playing in this range of 102 to 112. And at present, though, is still holding to a slightly positive case, with the MACD still in a potential prime position, that is, to see a further rise. Could see the market head on towards 110.40.55, and then maybe around that 113.55 to 80 area. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.